Hey guys, RC Peck here with Ask RC, and the question I want to answer is, should I paper trade, or how should I paper trade? So before I go into the answer, I want to talk about what paper trading is. So paper trading is a technique where you don't actually buy an investment. You read information or you look at a price chart and then you say, okay, you write down, I would have bought it here. And then you continue watching the investment and you assume you own it, and then there's a certain point where you're like, I will sell it here. And this is a popular thing that people are taught. So most trading workshops, most people who have written trading books, they talk about this paper trading idea. And it is an absolutely horrible thing to do. It will hurt your investments. It will hurt your life. And I am 100% against paper trading. It is a very, very dangerous thing to do. And whenever I hear someone talk about it, especially if they have a trading course or a training course or any sort of course, I really question if they actually trade or invest themselves, because paper trading is horrible. It doesn't teach you anything. The power of investing is to actually put your money into the market, right? So maybe I would have bought it, and I actually did bought it. These two things is Jekyll and Hyde. They have nothing to do with each other, right? You don't go have paper sex. You don't go have a paper organ transplant. You don't go have a paper marriage. You don't paper raise kids. There's no paper anything in any other area of your life. You actually go do it, or you do a little bit of it. When people paper trade, it's not real. It's fake. It's a waste of time, right? You have to actually go buy a symbol, go in, log in. Maybe you get freaked out because there's a bid and ask. You're looking too much. You're worrying about perfection. You're worrying about getting hurt, and you don't buy. That is more important to learn who you are actually going to be. So let's say you have a portfolio of $500,000. One idea is you set aside 5% of it. So that would be $25,000 on a $500,000 portfolio. Now, before you ever traded that, one thing you'd want to do is say, literally just take $1,000, right? If you lost all of $1,000 in a $500,000 portfolio, that's 1/5 of a percent. So here's the thing, you're not going to hurt yourself, right? So you take a corner of your $500,000 portfolio, which is $25,000. Let's just call that your trading portfolio. Okay, then you could take $1,000 and you want to follow a system. You just don't want to willy-nilly buy something, but you go and buy an investment with that $1,000. That is going to teach you years more, decades more of information than if you would have pretended on a piece of paper to buy it. Because you have to learn how you're actually going to be when you own the thing. Now, with $1,000 in a $500,000 portfolio, you're going to be fine, but you're still going to learn. And I'm just using the $1,000 as an example because it's still a real amount. Now, for some people, that may be a $5,000 amount on a $500,000 portfolio. So in that case, that's 1%. But here's the thing. Go buy the thing, even with $5,000. You could set a 25% trailing stop loss, which means you're only going to lose $1,250. So again, you're back to really protecting your downside. But this idea of simulating trading or simulating buying or simulating selling or simulating anything with investing, it is a huge mistake. You can't spend the money you make when you paper trade. When you lose, you don't have the same experience of losing, right? It's same thing like when you date. When you go out and you date and you want to meet that man or you want to meet that person, you actually need to go on dates and do it. You can't read about dating. You can't paper date. You actually have to go on dates and be like, oh, that's what a no looks like, or that's what a maybe looks like, right? You kind of have to build this gut biodome on how to kind of filter and understand who you might be attracted to. It's the same thing with investing. So the question is, should you paper trade? Absolutely not. Do not paper trade. It will hurt your future. Instead, allocate a small amount of your money, put it into a separate account, call it a get a new car account or go on a great vacation account. Identifying what you want to do it for is very important. But actually go buy with real money, and you can start with a small amount. This is so important, and so many people get this wrong. What's great about it is if you are a perfectionist, okay, now a perfectionist is an adult word for you don't want to get hurt. You're afraid of getting hurt by your mom or dad. I know that may sound weird if you're 40, 50, 60, or 70, but that's where perfectionism comes from. It comes from not wanting to get hurt, not wanting to be hurt. And the people we don't want to be hurt from is our parents, right? And so those emotional scars, even though they may be from 1, 2, 3, or 4, or 5 years old, we carry them. And so the reason why people want to paper trade and avoid actually investing is because they're so afraid of getting hurt. They're so afraid of their parents being mad at them. I know this sounds really weird to a lot of people, but that's the foundation of being a perfectionist. So you don't want to get into the trap of perfectionism, and you do if you paper trade. So actually invest money, watch, have an upside target, have a downside target. You will earn more from that $1,000 investment or that $5,000 investment, and put a trailing stop loss in of even 25%. And you're going to learn so much more, and you will not hurt yourself. Even losing 25% on $5,000 in a $500,000 portfolio is incredibly survivable. We're talking like 22 basis points. It wouldn't even register. But what you learn from putting that 1,000 in, or that 5,000 with a 25% trailing stop loss, you're going to learn so much about you. How did you act? How did you behave? Did you kick the dog and the cat when your position was down? Did you all of a sudden think you were king of the world or queen of the world when you were up 20, 30% and then you lost it again? That is the value of learning who you are when your money is in the market. And there's no reading you can do. There's no books you can learn about. There's no podcast. You actually have to put your money in. And then you have to learn, who are you really? This is a key problem with almost every training or trading or any sort of course out there that has to do with investing, whether it's books or courses, because it's literally wiring you to make a mistake. Thanks so much, guys. Again, this is RC Peck with Ask RC, and I will see you on the next video. Okay, bye, guys. Hey guys, thanks so much. If you love this video, you are absolutely gonna love our research service. Literally, it's 5 services in one. I think you're gonna love what those services are. Go ahead and click and check them out. All right, thanks.